Hello traders, welcome back in a new educational video. It's been a while since my last lecture, and I know some of you have been eagerly waiting for more content. As traders, one of the most important qualities to develop is patience. Without it, success is impossible. Many people have been asking me repeatedly about which 4-hour CRT they should select, and they are struggling to understand. That's why I'm preparing this lecture specifically to explain it in detail. I'll guide you step by step on how to choose the right CRT and how to implement it into your trading model effectively. Make sure to watch the entire video and stay tuned until the end for a complete understanding. I want to make one thing clear. If you are a beginner or new to this channel, please stop here and first watch my detailed video on CRT before moving on to this lecture. Otherwise, this lecture will go over your head. The link to the video is in the top left corner. Without further delay, let's jump into today's topic. The 4-hour CRT model. Today, I'm sharing one of my personal favorite CRT model, and which is the 5 AM 4-hour CRT model. Even there are many other models within the CRT framework. This will be a refined guide on how to execute this specific 4-hour model. This model stands out for its simplicity and high probability. This model is structured around the 5 AM 4-hour candle in the Forex market. So, here are some confirmational key points to remember. Number 1. The 5 AM CRT range. This forms the foundation of the model. You'll mark the high and low of the 5 AM 4-hour candle as your range. This range becomes your first confirmation, a high probability, time-sensitive setup. Number 2. The 15-minute or 1-hour CRT formation. Look for a CRT setup within this 5 AM range on the 15-minute or 1-hour chart. This is your second confirmation, a lower time frame CRT within a higher time frame CRT. It's crucial to understand how the lower time frame aligns with the higher one. Number 3, the timed purge. The model requires a liquidity purge, specifically between 9 AM and 10:30 AM. This third confirmation is the price purging on the one end of the 5 AM CRT range during this specific time window. If the purge occurs outside the time window, then there is no trade, and wait for next one. Number 4, entry strategy. Once all confirmations align, you'll look for your entry model. There are several methods of entry, but I will revealing only 2. The first is to enter after the second candle of 15-minute or 1-hour CRT closes. The more advanced option is to refine your entry down to a 5-minute, 3-minute, or even 1-minute order block. For beginners, I will only recommend it enter when the second candle of 15-minute or 1-hour CRT candle closes. For advanced traders, refine your entry using lower time frames, 5-minute, 3-minute, or even 1-minute charts by identifying an order block. In conclusion, the 5 AM 4-hour CRT model is highly effective. If you were to rely on just one trading model for life, this could easily be a top one. It's straightforward, clear, and very easy to use. However, always ensure that each CRT trade should have at least 3 confirmations, starting with the time CRT at 5 AM, then the time purge, and finally with the lower time frame CRT aligning with the higher time frame CRT. When this model applied correctly, has the potential to significantly improve your trading results. Trust me guys, choose this one model for your life and retire your parents. Now, let's hop onto the charts and see how the 5 AM CRT model actually works, starting with GBPUSD. We'll analyze the 5 AM candle on the 4-hour chart. So first of all, you have wait until the 5 AM candle printout. Once this candle is fully formed at 9 AM, we mark the high and low of the range. So we already marked the high and low of 5 AM candle, and the number 1 confirmation is done also. So let's drop down to the 1-hour chart for lower time frame CRT within a higher time frame CRT. So here you can see we have a 1-hour CRT forming at high of the 5 AM CRT, which I have outlined with red lines. So we have 1-hour CR high and CR low, and second confirmation, which is lower time frame CRT within a higher time frame CRT, is completed. Also, we have this breaker where the second candle of 1-hour CRT tap in and then rejected. In this example, we'll also explore a more refined approach, drilling down into even lower time frame like the 5-minute, where we find out our final entries. So let's hop on to the 5-minute chart. We already marked our 5 AM CRT high-low as well as 1 hour CRT high-low with red lines. Now let's move on to our next confirmation, which is the time purged, and here you can see the purge occur at the exact time window, 9 AM to 10:30 AM. Once again, remember, if the purge is outside the time window, then there is no trade. So where the exact entry lies, we have a thick up-close candle which takes out the buy stops and then closes below it, so it's an indication of strong change in state of delivery and forming a higher probability order block. So we enter at the order block as short position, and my stop loss is just above that order block and targeting the opposing end of 1 hour CRT low, as well as our final target is 5 AM CRT low. And here you can see we have reached our target. If you miss the first entry, or if you're a beginner trader, then you have to enter of off after the second candle of lower time frame CRT candle closes, and enter above or below the opening of third candle of lower time frame CRT. So let's look for the next opportunity in this example. We marked out the third candle of 1 hour opening, and we will be seller above its opening. Above the third candle opening, we have a fair value gap. So we enter of off in the FVG and targeting the CRT low, and you can see how this model works effectively. I want to add one more thing. If the lower time frame CRT is forming on the 15-minute chart, then for entry, you can drop down to the 1-minute chart. The lower the time frame, the more precise the entry. However, it requires experience to handle. Beginners should stick to the 15-minute or 5-minute entries until they're comfortable with lower time frames. So let's move on to the final example. Hop onto the Euro US dollar chart. We're going to look at the 5 AM 4, our CRT. We hit a daily key level, which is an old high at the daily time frame. We forget to add this confirmation in our previous example, so you can add a higher time frame key level as confirmational tool to increase the win ratio of your CRT, and I would definitely recommend it to the beginners to look for a key level while trading the 5 AM CRT model. So let's move further for our final example. So we hit the key level, and we will focus on the 5 AM candle. So we mark it and also mark the high and low of that candle. So next, hop onto the 15-minute chart to look a lower time frame CRT at or around the 5 AM CRT high. So we have a 15-minute CRT forming at the high of 5 AM CRT, so we will mark the high and low of that CRT. As you know, we have completed our two confirmations. First one is timed CRT, and the next is lower time frame CRT within a higher time frame CRT. We have also marked out the third candle open of 15-minute CRT. So now hop on to the 1-minute chart to find out our entries. Here is our third confirmation, the time purged, which is exactly happening at 9 AM, and it's confirmed our setup as a valid. Let's find where to enter a trade. This a thick up-close candle which takes out the buy stops, and then price closes below that candle by confirming as a high probability order block. So we enter in the order block as a short, and our stop loss is just above that order block and targeting the opposing end of 5 AM. CRT, you must take partials at the equilibrium or the opposing end of the lower time frame CRT, which is either 15 minutes or 1 hour. So let's look for next opportunity if the first entry got missed. We have already marked the third candle opening, so we will be seller above that opening. Above the opening price, we have a fair value gap, and price create a turtle soup in the FVG, so we use turtle soup entry model, and our stop is just above the FVG and targeting the opposing end of the 5 AM CRT low, and you can see how the market manipulates to the downside and took the 5 AM CRT low. If you only focus on taking trades targeting the EQ of the 4 CRT, your win rate will be much higher. If you're still watching, this concept is key. When you spot a CRT within a PDR that should push the price up, especially after a change in state delivery, pay attention. If you notice a CRT on a lower time frame within the order block that caused the change in state of delivery, it's a high probability CRT range. You can execute this on the lower time frame. This is a shorter video than usual, but everything has been made clear and straightforward. I've kept it simple and direct. You might need to rewatch this a few times to fully grasp it. Advanced traders may find the repetition excessive, but it's necessary for both beginners and advanced students alike. Good luck with your trading, and have a great day.